Hello and welcome to another update video about the DXY, one of the most important charts at the moment, I would argue. Already explained in the last videos the longer term structure, but just want to give you another update just briefly for everybody who's new on the channel, who's watching the DXY for the first time. Won't go through the entire chart, but the idea is that we bottomed here in a wave 4 in 2008, and then we moved up in this fifth wave, which will be ending somewhere up there. The price is not necessarily accurate, but in this fifth wave we have most likely completed now, and that is my primary expectation, a 5-wave move, a leading diagonal in 5 waves within this channel. That means a wave 1 top was reached here, I think a couple of weeks ago, around $115. What does that mean? If we completed a leading diagonal in a wave 1, it would mean that we are now in a wave 2 correction. A wave 2 correction is normally a quite a sharp pullback, okay? And if we look at a target for this wave 2, it would just make sense to assume that we're going to hit the channel support here, maybe just below $100, maybe 95, depending on when it happens, $94, $95. But let's take a look at the lower level time frame. We go to the 1-day chart and look at the latest developments on the chart. So there's two main scenarios I'm following. The primary expectation is the one that is charted here, and it means that we moved up here from this small wave 4 from the end of May 21 all the way up to the top here in October, where we peaked at around $115. That's the primary expectation. That means the wave 1 top was in here. We are now moving down in a wave A of the wave 2. We will very shortly see a recovery in wave B of 2, and we should then see a wave C of 2. That would complete the wave 2, and then we can expect a rally in wave 3. But this will take months, if not years, to play out. Look at how long this wave 1, well, the entire wave 1, well, many years. Yeah, so if we zoom out, it actually took, well, what did I say, 2008. So yeah, I mean, it will take a bit longer than probably a few months, this wave 2 overall, yeah. Because bear in mind, the wave A might be nearly finished, but the B wave is a corrective structure, so it can stretch out months, and then we will have a wave C. We'll see, wave C. So anyway, the idea is that wave A is nearly done. I mean, we've already come down quite a lot since the $115 high back in October. So already that actually took 1.5 months now to come down here. And then bear in mind there will be a wave B and the wave C and so on. And as we get close to the finish line, it usually takes a bit longer because sellers get exhausted and so on. But timing is always very difficult to forecast. Okay, but this is the primary expectation. And the other scenario, but I'm not really leaning, I don't get a warm feeling about it, but it's possible. This other scenario includes the assumption that we haven't peaked here yet, where we had a local high at $115, but was it 115? Yeah, that we had a local high, but that this was only a wave 3 high. We're now coming down in a wave 4, and we will get one more high in the wave 5. And a key target for that would be the $120 level, because if I scroll to the left, probably, here. This is the wave B high from 2001, basically where we had a double top here. You could maybe even argue it's a triple top, and this will provide massive resistance. But this is the other scenario, the alternative, the short-term, more bullish one. I'm not in favor of this one. I don't like it, because it would mean the whole mess will take just even longer. Because only after the wave 5 high you will get your ABC, so it will all take much longer to finish. But also, I don't really like the proportions of it, but it's possible. It's possible. What does it mean for trading or for, it means short term nothing different. Yeah, short term they are going to move the same way most likely. What I've got here charted as a B wave could, in the alternative scenario, be the wave 5. It just means it will push a bit higher. But even in a B wave scenario, we can get an overshooting wave B. Yeah, so they will move in very similar ways. So it doesn't necessarily make a great difference. It's just that the B wave is most likely not going to be overshooting. The wave 5 would be higher than the previous high. But in the short term, it doesn't really make a difference. So what we can do, we just focus on the short term. And as we then get more clarity and visibility of the structure here, we will be able to make a call. Is it going to be an impulse, or is it going to be a corrective move up like a wave B? But in the very short term, you can see the sub-wave structure here. And as I said in the last videos, I'm still waiting for one more low. It would be ideal. We don't necessarily need it. Yeah, we have enough waves to the downside to say that wave A could be complete. But it's not my primary expectation. Primarily, I'd be looking at one more low down into the region, yeah, let's say around $100 and $103. But before we do that, we could see a little bit of a stronger upside in wave 4, basically a fake out of the wedge. So let me explain that. If we really say wave A has started here, wave A of 2, then we came down in a wave A, we moved up in a B wave, and we're now coming down in a C wave. This C wave consists of obviously 5 waves, and I've got 2 wave counts here. I've got the blue one. Well, the blue one is the main count, and then we've got within this blue wave 3, I've got 5 smaller subwaves. So if I look at the entire structure, it's 1, 2, 3. Now it's going to get interesting because we would be looking at a wave 4 up and a wave 5 down. So ideally one more leg down. This wave 4 can stretch all the way up to the 50% retracement. And that is around $107, $108. Yeah, so I think I didn't make it very accurate here. Let's do that pretty accurately. Yeah, that should be fine. So yeah, it's like $107, $108. Only above that level, only above the 50% Fibonacci retracement, I would consider a low was already in. So if we move up higher now, I will primarily treat this as a wave 4 with one more leg down to follow. It's only above $108 that we have to consider the low was in. Why is that? It's just the subwaves, and it would, because the move up at the moment here is in 3 waves. So it would include, yeah, we could even say maybe we've got wave 4 now, but it would be a very short wave 4. I mean, it reached a 23.6% retracement. That is perfectly fine. It's perfectly fine. It's the minimum what a wave 4 should do, but it's just not very strong. I would normally expect the 38.2 retracement at least. Well, ideally, yeah, which is basically $106.88. So what we could have here is an A wave with a B wave currently going on, possibly quite a strong one if it's flat, and then a C wave to the upside, ideally hitting the $107 level. And then we could come down. So let's see, we won't really know that until we break below $104. If we do that, then we're coming down to 103 to 100. If we go higher, the next resistance will be 107, then 108, and above 108, I will consider that a low has been made, and only above 108, I will consider that we are in the B wave to the upside. Where that will go exactly is a little bit unclear at the moment because we haven't got a clear signal that wave A has finished. As soon as wave A has finished, we can make a call where the B wave will go. What I can tell you, it's most likely going to be quite a strong wave to the upside. Why is that? Because I count wave A as a 3-wave structure, A, B, C. And if wave A is a 3-wave structure, it's most likely, all this thing here is most likely going to be a flat pattern. In a flat pattern, wave B can retrace all the way up to, well, 90, 95, maybe even 100% of wave A. So it could be quite a strong B wave. I wouldn't be surprised, okay? And then we come down in wave C afterwards. So this move up will most likely have a negative impact on the stock market, most likely have a negative impact on the crypto market, because there are negative correlations, okay? So when the DXY goes up, you typically see a decline in other asset classes, for example, the crypto market. This is not necessarily always the case, but at the moment there are temporary correlations. That's my update about the DXY. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye bye.